Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Wednesday, September the 18th, 2024. I'm going to start on the S&P 500, and I am covering the futures market tonight. I understand and do look at the SPX, so those of you who may doubt that, I am doing the analysis on the ES because that's what I trade. I don't trade the SPX, I trade the ES. So starting with that futures market, I'm starting on the 4-hour chart. Now, Fed came out, Fed made their decision. It actually came in 25 basis points higher than what I think the majority of the market was actually looking for and maybe have already, quote unquote, baked in to prices. So there was a quick move up and then a total, well, I want to say the best word you can come up with is rejection, but it really was just a total reverse and coming back down. But it did not fall all the way initially. So it ran up, it dropped back down to maybe 50, 62%, ran back up, dropped back down, ran back up. So within that context, it puts a little bit different spin on it, but gave me enough what I feel information as to kind of eliminate partially. I will say partially because everything always remains a possibility. It just drops down on that probability ranking, where we could still be in that minor fourth wave, and what we still have available to go to the upside would be under a near regular B, and that may happen. So I can't say 100% no to that or 100% yes to what I am showing here tonight. So I've gone back to what I've shown before, in that the S&P finished minor wave 3 back in July, came flying down in on August the 5th. Well, actually, pretty much the balance of July and then August, up until August the 5th, and put in a low. That I'm now saying is, I'm going back to my original, which was that it is all of minor wave 4. So what has really taken place since then would be that we've gone up in wave 1, minute wave 1 of minor wave 5. And then the first downturn that we had that actually flipped us back over to a negative gamma atmosphere, to a risk off trading position. And that lasted not very long, so it flipped. So here, let me just start with that to include that into the analysis. The market dropped into a negative gamma atmosphere back in August, and it really pushed, and we dropped very strongly over just a period of like 2 or 3 days. I'll tell you right now, it was 4 days. And I think a weekend may have been in there. In any case, the market dropped very strongly as we went into a risk-off trade. And it didn't take very long for the market to create the reverse of that, and that there's the risk on. So again, reversing a lot of trades, and the market then climbed higher. But through that, what I'm considering there is that that was minute wave 1 of minor wave 5. Then again, with that, the options flow hitting again, the market drifted back down towards a risk off. Didn't really hit it, but we were there. And had it gone, yeah, it did hit it, but not as severe as the next level down. So let me just say, we went back into a borderline, are we risk off, risk on type of trades. Then we did that threw it also, but not totally reversed it. And then we continued to work our way higher. Once we crossed over 5,600, and basically it almost was 5,500, the market began to shift more towards risk on trades. But that became a little bit hedged, or whatever you want to call it, going into today's Fed decision. Nobody knew anything for 100%. If they told you that before it was announced today, well, either the buying on the inside, and I doubt that that's happening. So I would just say, yeah, well, the market basically was demanding it. So, and the market had already baked in at least a 25 basis point hike. They got 50. And so the thought pattern behind that was, is like, well, does that suggest that the Fed is going to be more concerned about employment? And the answer is yes. And they even said it in their conference today, that they would continue to keep an eye on that. And what are they going to be looking for? Wage inflation. And wage inflation, of course, is not good to start lowering the rates. So there's a very soft and tender balance that's got to continue to go there. So in other words, to keep the economy going, it's like the wage inflation has to be really at a much slower pace than growth. So anyway, back at the farm, I believe that we are now in that minor fifth wave, and we have completed minute waves 1 and 2, so that puts us in minute wave 3 up, which we already know is going to be the strongest, the longest, and likely extend. So let me bring it down to the hourly chart, and I'll go over that. So here we are. I started counting 1, 2, 3, 4, and in fact, I had labeled it just like that on the chart coming in, and then we did get the 4. And you might say, no, wait a minute, it went lower. It's like it did, but look what had happened. It came down, finished, and then went here, got there, and then shot up, finished the move. That's where I put that 5 in, and then that minuet wave 1. So what we're in right now is A, coming down. And I'm pretty sure that it will, yeah, we're still in that A wave. And if I bring it down again, we would just keep going lower. I would go down to the 15, go like this, see what all that looks like. Well, could be A, we get a B, and we get a C. And, or that's an A, 2, yeah. It's kind of weird, but that could be the A wave. Then we get a B wave that maybe has the possibility of doing at least 50% retracement of today's rally. And then coming back down into C, and then we put a 2 underneath it. Now, pulling this back out to the hourly, what we got right here are the fibs for minuet wave 2, if indeed that's what's going on here. So anyway, I pretty much can think that this is a clean 5. And therefore, we should be able to kind of come down in an ABC. And whether it's going to be a zigzag or a flat, I'm looking just because of the nature of the initial rise and then the decline, that it'll be more of a zigzag. So we may have a little bit more to go, and then we come back up, and then we come back down. So here are the support levels for a minuet second wave. That's 56.40, you can say 41. You can go actually 56.53 down to like 56.35. I wouldn't go too far below here, but 56.53 because that's where the 200 is. And if we start to turn lower, the 200 should go flat, which will likely keep it right about in that area. And then below that, we have 56.41. And then if it continues, we have 56.04. So you can see that even a wave 2 would likely keep us above or just below 5,600. So what happens as this thing goes up in terms of levels is that likely the volatility trigger starts to rise with the market. And it seems that the market is almost a little bit more cautious now as we're starting to get up again towards new all-time highs. And so that's why I think that relationship starts to come in, that we start to see they're bringing up, and what they're bringing up, and when I call it the volatility trigger, what that level is really going to represent is a break, and a solid break. Now, I will just mention today that during that the day, the market went and triggered the volatility trigger in the Qs, I believe in the SPX, and I believe in the spiders. And technically in the, and basically across the board, the NDX, but then it retook it. And now it's coming back down, and I have to go look to see where it comes in. But I found that to be very interesting. This is before the decision was made known. So we didn't know what the decision was going to be. And I just found it interesting how quickly the trigger can happen, because there was follow through. So as a day trader, it presented some really solid opportunity. A little bit confusing on one hand, but all you had to do is just follow the signal. And when they reversed it, you could see it, because you could see it coming in via the future, because you could see it coming in via the underlying. And you see the buying start to turn around and come back into there, which is like, okay, so now we're moving into a different type. So in any case, I am going to lean a little bit on this one as the one being in control. The Fed kind of made it clear that they're still, they're going to be watching figures, and they laid out targets for the balance of this year and next year. And I think that was good on the part of Powell. So at least we got an idea as to what they're looking for. So that can be balanced against the actual figures. So, but I think as far as the market is concerned, I don't think that they were absolutely like against what we saw in terms of, oh, he did a 50. And that may have a shorter term positive effect on trade, on, on risk. So we may see the risk on trade continue because we're heading into earnings. Now, at some point, I would believe that what starts to come back in as far as earnings are concerned is what we noticed and have seen in the banks. They're going to lead. That's their new thing. They lead. So the banks will be leading, but we're almost done with this quarter. It's September the 18th and next is September 30th, end of quarter, and that's going to be a big expiration day as well. So we're going to see if that sets the stage with regard to flows, the release of gamma, the release of volatility, and see how that does affect trade. Right now, I do think we're coming down in a wave 2, which would suggest that a wave 3, as it's getting ready to turn and happen, should be powerful. We should get some very strong upside moves and to me, watch what happens. See if they don't start selling the VIX. When we start seeing the VIX, and the market will actually just kind of walk itself up, as we have seen many times before. That's the kind of the risk on trade. And it makes it appear it's like, gee, the market can't catch a sell. Catches a lot of bids, but it can't catch a sell because the action that's going on. And again, you can follow all this and through the flows, through how the options are actually trading. And so, but in any case, you're going to see that the dealers are the ones that are going to be providing the upside in the stocks because they have to hedge the trades that they're being done. So dealers are selling the call and buying the put because that's what the risk on trade from the other side is doing. They're taking that cash that they get from selling the VIX and they're coming in and they're buying calls in the underlying stocks. And they're selling some, not all, but some selling the puts in the underlying stocks. The dealers must buy. And pretty much I would suggest that they likely will go 1-to-1 unless you're really big, and then you can kind of, delta hedge or delta neutral. In any case, enough. I think we should look for continue, but it might be, again, if we're going through an ABC or we're going through a quick little 5 down to put in an A wave, and then we got a 3-wave rally in the form of a B wave, and then coming back down in 5. Those 5, they're not going to be big. We're talking about they're on a sub-minuet level. So I think coming down, up, and then down. So maybe we do get back and test that 5604 area before all is said and done. And then we put in a wave 2, and then we start to rally in a 3, and you already know what I just said, what I would be looking for there. I really would. I want to see it start like that, but not stop. It's just like, bam, we're in and we're gone. And that would be an excellent announcement that we're heading. And we, in that rally, and that initial, wherever this stops, that initial rally, I would really love to see it to break 57.78. Boy, that would really put the lid on, right, to say, okay, take the lid off, we're going up, and then we'd be looking for those additional levels. These I'm leaving on, by the way. These continue 59.21 to 6,009. Those are associated with the irregular B. That has not been eliminated because even if I'm going to go about that, then that we still could be in that C wave up. So this is A of B, B of B, and C of B, and that C wave will be 5. And it should be very powerful. And so there we have where we have levels. Now I'm marking this as wave one. So boy, 3, 4, 5 would blow it past that. So again, what it also would suggest, I'll put in one more fib that's just to the upside. And that's going to be for a third wave as it relates to one. And let's put it right there. Thank you. And let me just fix this. And of course, it's going to be in the color white. So that one, yeah, that one doesn't really, I don't think that's effective. But that is, and that is. And actually, that could be too, but I'm not going to include it. Now, these are going to also be in, I got to differentiate. So bear with me as I just kind of put them in this color blue so that we can see the difference, because they would otherwise be in white, and that's over here. So it's 59.75. Is that right? No. Okay, there you go. 59.75 and 62.99 would be where wave three would be 100% of wave one at 59.75. That probably won't work. So I think if indeed it's minor 5, we could exceed 6,000 based on how this is all playing out right now in the S&P. Only other count that I could have is that this is 1, 2, and this is a 3 and the 4. But look at, and the 4 is not really violating the wave 1, but boy, this one fits a lot better. But again, I'm going to pay close attention. The only other choice that we have, again, is 1, 2, 3, and that's a 4, and this still is a 5. Unlikely that's wave 1. So we still can get up into here, and be done, or just be finishing a third. We will keep close eyes on it. Bottom line, if we come down, finish this, and we take off again with strength. So what we're really now the market will be paying attention to, and I think that the algorithms will be tuned into, is paying very close attention to the details of employment numbers, initial jobless claims, and then just basically to see how consumers are handling, how are retail sales, and again, and keeping an eye on the inflation, but they're going to be paying attention to employment because that's what the Fed said they're going to focus on. All right, let's go over and take a look at the NASDAQ. NASDAQ is pretty much the same. Let me just pull it out to the 4-hour chart and we'll take a quick look. I did move it back. I am not as quick to take this off just yet here. Now that you may find funny because the NASDAQ really has its work cut out for it in keeping this all intact. So if we're in that minor 5, which I actually do feel we are, so again, I'm giving a little bit more probability to this, what I'm showing, but I'm not willing to take all of this down in case this does end up being an A, B, and a C, and we get up here close and then turn around again. So it still could be a nice move and a nice tradable move, but the outcome to be determined, actually. Again, as in the S&P, we have the potential that we could be A, B, C, get up to here. It forms an irregular B. We come flying back down, drop into here. And then do another rally, all kinds of things, right? So that's still there. But I'm leaning on this one. So what that then suggests is that the NASDAQ is going to hightail it, doing the same thing. So I'm down a degree than I was on the S&P. Reason is that when I pull it out, I feel if we're in a minor 5, these have to be, oh, you're right. My error. Let me, I just was going to talk that through, that these would be, and I was going to say minute, and I'm like, that's not how you marked it. So let me finish doing that real quick. So this will make more sense, because then the degrees are going to be in agreement between the NASDAQ. So what we are in is a minute wave 3 moving up, but everything else remains the same. I will fix this. but I just want to go on with the analysis. So if we're in looking for, go right back out because I got to add that fib. So one more fib I'm going to add here and just get out of my way. We're going to do it that way. We're going to put that there. We're going to put that there. And this is for wave 3. So back down to that hourly chart. So this would be minute wave 2. We're in a minute wave 3. And this again drops down to this. I apologize. My brain told me to do it and I just kind of blanked it out going over here. And these I'll turn back over to gold. And this then I just put into the right color. And that's going to be 236, kind of been taken out, but I'll leave it on. That, and that. And so these become minuet. So we're in minuet 1, minuet 2, and this would be wave 1, and we're looking for wave 2. And this should also be pretty much mirroring each other between the S&P and the NASDAQ in terms of being likely zigzags, so zigzag. So that would suggest 13,391, and you got a little plus or minus there, and then 19,234. So basically, even if we came down 618, I believe we stay above 19,000, which should keep a positive light on the NASDAQ in terms of option flows and volatility triggers. Now, it may, again, like it did today, get down there and start breaking a volatility trigger, but it retakes it. So again, I think that's partially what the play that we're seeing, in this last hour and even this additional hour of like, where do we want to close the market? Do we want to close it at a volatility trigger above or below? And so, but we'll find out. And we'll see how all of the options trading that took place this afternoon, how does that balance out against what's existing and where do those numbers come in tomorrow? So that I still, and I'm more and more convinced each day that is exactly how we're arriving at these levels, and whether they fit in a fib, which most of the time they are in a fib area, and then put back into the Elliott. That's what's taking a little bit more time because I have to let the market, I have to let the market tell me when it becomes a choice. And as it has, it was a choice of 3 or 4, and now I'm kind of narrowing it down to basically 2 and maybe 3 of where the 2 are looking for upside. One being that this could be the minor 5th wave, and that's actually, I have to be honest, is probably my preferred if I have to break it down even further, because I wanted to finish that intermediate 3rd wave, and that kind of shows some of the optimism that's going to be building that I think may even come out of, now that we have the rate cut, what after we start getting into earnings, what their forward guidance is going to start to suggest. So I think we could get a little bit of a change and that opportunity where the market adheres or solidly moves back into artificial intelligence, builds up all these other positions, and we get up above like 22,000 and finish minor wave 5, and then in turn that intermediate 3rd wave. That would set us up for a very tradable and a solid knock to the volatility trigger coming back down. So back to the NASI. I still think we got some downside to do. Here's our levels. Well, first of all, on an hourly, we've got the hourly 200 period moving average at 19,530. Then we have fib 382 support 19,391. And then again, 50%, 19,234, 618. Remember, to wave 2, it certainly can do it. 19,077. So those would be the area. And again, zigzag, so it's 535, and that might look like 1, 2, 3 to some people. But right now we're going to look at it to be a 535 and finish and then roar. Same thing going up. It's got to go and it just has to go. So upside, these are for if this is for the overall 3rd wave. This one I think is low, considering that's where wave one is. 100%, maybe, but that would be where wave three would be equal to wave one. I think we go higher. And the next level up is all the way up here. So yes, I think we could really start getting up. And this would be minute wave three of minor wave five. So it does start to elevate what we could see before a more severe, what's going to appear severe, right? Because we're going to be rejecting all-time highs at some point before we come flying back down and go right back up again. All right, I'm going to end it right there. Let me take a look for Thursday, what we got coming out in terms of economic numbers. Initial jobless claims, Philly Fed manufacturing, existing home sales, U.S. leading economic indicators. I'm imagining that they're going to be they already know. The Fed already knows that helped. So I think that they will be well received. So the first two are 8:30 a.m., the other two are 10 a.m. Eastern time. And the next daily update will be on Thursday, September the 19th.